U.S. stock futures lower after a mixed session on Thursday. The Dow Jones falls almost over 500 points, while the S&P 500 and the Nasdaq close near the flat line. The 10-year yields rise the most in nearly a week. Markets in Asia too open mixed as trade tensions dent sentiment. China keeps key lending rates steady in a bid to shore up yuan as Trump tariffs pressure the currency. The GIFT Nifty is indicating a lower start for the Indian market. Crude oil prices fall over 1% after progress in the US-Iran talks eased. Supply concerns, Russia and Ukraine truce also supports. Gold prices continue to rally amid the safe haven buying. A slew of earnings post market hours on a Friday over the weekend. IT major Infosys missed street estimates while ICICI Bank reported a strong growth in its profits and improvement in asset quality. For HDFC Bank, it was a strong quarter. U.S. Vice President J.D. Vance begins a 4-day visit to India today and will hold talks with the Prime Minister on India-US trade deals, beside other issues. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast and I'm Vinny Motiwala. Thank you so much, as always, for tuning in. A quick look at what the Asian markets are doing, and let's start with that because the handover that's coming from US has not been that exciting. Asian markets as of now have opened up a bit mixed. Look at the Taiwan index, that's down almost 1%. And on the flip side, we've seen Hang Seng that is holding on to gains of almost 1.6% in today's trading session. The trade tensions that we're seeing between China, US and across the globe in terms of trade talks that are going on, that's something that investors are keeping an eye out on. So let's watch out for that. Now ASX 200, that's the Australian index, that's managed to open up with gains of 0.8%. Nikkei on the other side is down almost 1% in trade. So very, very mixed opening is what we're seeing coming in for the Asian markets. But let's look at the Nifty implied open. As of now for the Indian market, seems like it's going to be a bit of a red start that's coming in. 40 to 50 points down. At one point of time, it was down almost 54 points. So right now, it's down 46 points is what the Nifty implied open is indicating. So keep an eye out on the Indian market and where it's going to be opening. As of now, a bit of a subdued start is what one could be expecting. But looking at the US markets and how that handover came in over there, Wall Street that ended on Thursday's trading session was also a bit mixed. Now, Dow Jones that fell almost 527 points, while the S&P 500 that gained 7 points in the trading session on Thursday. Now, tech-heavy Nasdaq that lost almost 20 points at close as well. Major averages that posted losses for the week as well. The Dow and the Nasdaq each lost more than 2% for the week to date, while S&P 500 slid almost 1.5%. We've seen CNBC's Steve Kovac, who's getting us a wrap on what happened on Wall Street.
U.S. markets were mixed in Thursday trading as Wall Street finishes up a holiday-shortened week. The Dow, driven by a decline in United Healthcare stock after disappointing earnings, lost 527 points. But the S&P 500 was up by 7 points and the tech-heavy Nasdaq fell 21 points. President Trump today again called on the Fed to cut interest rates and said Fed Chair Jerome Powell's termination cannot come fast enough. A senior White House official tells CNBC that the president's comments should not be seen as a threat to fire Powell. But his comments come one day after Powell said the Trump tariffs put the central bank in a tough position as it decides whether to keep inflation in check or boost economic growth. The Wall Street Journal reported today that the president has privately discussed firing Powell for months. Google parent company Alphabet down in Thursday trading after a federal judge ruled that Google has illegally monopolized online advertising technology for publisher ad servers and ad exchanges. The ruling could allow prosecutors to argue for the breakup of Google's advertising products. It's the second court ruling that Google holds an illegal monopoly after a similar finding in a case about online search. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. In fact, let's listen into what the U.S. president said on interest rates as well as the Fed.
Prices are coming down, not going up. Only the fake news says they're going up. The only thing that's even are interest rates. And if we had a Fed chairman that understood what he was doing, interest rates would be coming down too. He should bring them down.
Let's also listen into some reactions coming in from Trump's comments.
We just don't know whether the tariffs are going to be a one-time price increase and therefore not really be inflationary for a long time. And we don't know really where things are going to land, so it's hard to evaluate what the growth implications of the tariffs are going to be. It's right now to think, if you're at the Fed, what can you do with your policy tools to ensure that the increase in the tariffs don't become a more permanent or more persistent increase in inflation? And what they can do with their tools is to make sure that inflation expectations don't get out of control. And this is usually the medium and longer run, which is what the Fed's focused on.
Powell showed yesterday that he's not going to allow himself to be swayed by the rhetoric coming from the president. He feels apparently pretty confident that the law and the courts are on his side. You know, any attempt to prematurely remove Powell would, I think, have a very adverse reaction, or be met with a very adverse reaction in markets.
Now, that's all the global market action that you'll have coming in for all this morning, the overnight cues that we had, the weekend cues that we had. But how is all this impacting our Indian markets? What are we watching out for? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for in today's trading session as well. First up, let's go across to Vivek, who's here to tell us the important cues in the market that we're watching out for. Good morning, Vivek.
Well, good morning. You know, we are coming off what was a very truncated week, and remember, we had market holidays on Good Friday. You know, a whole host of international markets too were shut on Good Friday, and today there are quite a few markets that are shut on account of the Easter holiday as well. So that is something that we need to keep in mind before we go ahead and see the cues for trade in for the session today. Well, U.S. markets, a third straight week of declines is what they saw last week. Oil prices actually saw a bit of a rally in the week gone by, but they continue to hover around the $68 a barrel mark. We're talking about Brent. Now, talking about Indian markets in the week gone by actually saw the biggest weekly gain in over 2 years. The Nifty Bank was the clear outperformer, and remember, the Nifty Bank will remain in focus today on account of results reactions of HDFC Bank, ICICI Bank as well as Yes Bank, and all of the results were quite encouraging. The broader markets too performed very well, both mid-cap and small-cap index gaining over 4% each. In terms of the sectoral indices, what did very well? Well, the realty index, the financials, metals, all of these packs actually outperformed in the week gone by. And when you're talking about Friday markets, it actually saw fourth straight session of gains as far as Thursday was concerned. Now, what are the key results reactions that we need to keep an eye out for? HDFC Bank, ICICI Bank, Yes Bank, Infosys, when you're talking about FY26, the kind of guidance that they've given has been quite muted. In terms of Asian markets, you know, the cues that we're getting is quite mixed. PBOC China has kept the key lending rates steady, and this was something that the street was watching out for. Earnings season, thick-off earnings season starts this week, and there will be significant earnings reaction for results that came in the weekend as well as on Friday evening.
Okay, Vivek, thank you so much for that. But let's go across to Sudarshan, who's here to tell us the important cues in the world of F&O this morning. Good morning.
Good morning, Vinny. So what a week it was. We have posted weekly gains. That was the biggest weekly gain that we have seen in the last 2 years. And that was majorly led by banks. Also over the weekend, we have seen strong set of earnings from two banking heavyweights, that HDFC Bank and ICICI Bank. And it seems that in today's trade, Nifty Bank is all set to hit the record highs. As far as the cues and its impact on GIFT Nifty is concerned, it's indicating a start with minor cuts. GIFT Nifty is currently down around 30 to 40 points. And on the flows front, we continue to see buying from FIs. On Thursday also we saw FIs buying more than rupees 4,600 crore, while from DIs it was a minor set of selling that was more than rupees 2,000 crore. In the index futures too, FIs have bought more than rupees 400 crore, and they have added long positions of nearly 39,000 contracts. And in front of that, short position addition was almost just 1,100. And with this, FI's long exposure now has increased to 30%, which is highest in last few days. Now, on the option front, on the call side, 25,000 call has seen the maximum addition, where the addition was almost 30 lakh shares, and followed by 24,200 call, where the addition was more than 21 lakh shares. On the put side, 23,800 put has seen addition of more than 17 lakh shares, and 23,600 put has seen addition of nearly 17 lakh shares. With these important levels for Nifty, support is now seen somewhere around 23,400, and now resistance has moved higher to around 24,000. Lastly, stocks in focus, there are total 6 stocks in the band, and new entrant is Angel One.
Okay, Sudarshan, thank you so much for that. Keep an eye out on the cues in the world of F&O as well, and some of the other stocks that Sudarshan mentioned. But now over to Ria, who's here to list out the stocks to watch out for in today's trading session. Good morning, Ria.
Well, yes, let's take a look at the stocks that are going to be in focus today. A lot of stocks will be in focus on the back of their Q4 numbers. First up, Infosys, the revenue has been sharply lower in Q4. The dollar revenue has declined by around 4.2%, and the constant currency growth has declined by 3.5% sequentially. And the company has also missed its FY25 guidance of 4.5 to 5% growth, with the growth coming in at 4.2% in FY25. For HDFC Bank, we've seen strong core operating profit growth of around 20.6% on a year-on-year basis, and the net interest income has gone up by around 4.2% over the previous year. For ICICI Bank, we've seen weak loan growth this time around, but the PNL has been quite healthy. The net profit has gone up by around 5.5%. But if you look at the deposits growth, that has been the weakest in 8 quarters, and we've seen the weakest advances growth in 17 quarters as well. Moving on to Tata Elxsi, the net profit has gone up by around 13.4% sequentially, and the margins this time around have come in at just 20.1% versus 23.5% in the last quarter. For Just Dial, the revenue has gone up marginally, just about 0.7%. But if you look at the EBITDA margins, those have come in at 29.7% in this quarter versus 20.1% in Q3. For Nasdaq as well, the revenue has gone up by around 4.1% sequentially, but on the EBITDA margin front, we've seen a miss of around, the margins have come in at 15.3% versus 16.2% last quarter. For Jio Financial, the net profit has gone up by just about 1.7%, but on the revenue front, we've seen a growth of around 18% over the previous year. Let's also take a look at some operational updates that have come out for Oberoi Realty. The Q4 bookings have gone down sharply. We've seen the bookings come in at 853 crores in Q4 versus 1,775 crores that we saw in Q4 of last year. So a decline of around 52% over the previous year. For BHEL, the revenue has gone up by around 19%, and we've also seen the highest ever order inflows of 92,534 crores in FY25. Also keep your eye out on IndusInd Bank, since they have appointed Santosh Kumar as the deputy CFO of the bank. And lastly, also keep your eye out on Adani Ports, since they are going to acquire Abbott Point Port Holdings Singapore from Carmichael Rail and Port Singapore Holdings.
Right, Ria, thank you so much for that. But on that note, we're going to slip into a very short break. We'll get you more news and updates on the other side, so don't go anywhere. Welcome to Power Breakfast on CNBC TV 18, and let's move on and shift focus on the IT pack, because Infosys, that came out with its Q4 number. Miss came in terms of the numbers. Dollar revenue growth contracted by 4%, forcing the company to miss its full year growth guidance as well. The IT major is also expecting growth to remain subdued this financial year. Rima is joining in with us to give us more details on this one. Good morning, Rima.
Thanks so much for that. So let me give you the key points from Infy's numbers. One, for the March quarter, a big revenue miss. The company's top line has declined by 3.5% on a quarter-on-quarter basis, lower than street expectations. The good part is the company is giving us a guidance. They are saying in FY26, revenue growth will be 0 to 3%, slightly lower than the 1 to 4% that the street analysts were hoping for. But you know the environment is uncertain. But the management did say that at the lower end of the guidance, which is 0%, they are baking in some deterioration in the macro. At the upper end, that's 3%. They're assuming the macros remain stable or slight improvement. Margin guidance remains unchanged at 20 to 22%. But back to Q4. Now, Q4 was very weak for the company, at least in terms of the top line. At minus 3.5% revenue growth, it's also lower than peers. And because of that, the company has missed achieving its FY25 guidance. They end FY25 with a top line growth of 4.2%, lower than the 4.5 to 5% that they had guided for. That said, their margin defense has been strong. The company's EBIT margins were at 21%, very modest decline on a sequential basis. But considering the negative top line growth, it's a strong performance on the margin front. Deal wins too have inched up by 4-5% on a sequential basis at $2.6 billion. So on the whole, it's a muted Q4. The guidance is slightly lower than street expectations, but the guidance shouldn't come as a surprise based on the commentary that we've heard from the management, and the street will take comfort from the deal wins and even the margin performance.
Thanks so much for that, Rima. While addressing the media, the Infosys CEO and MD Salil Parekh commented on deal wins made by the company and how it is expected to roll out despite looming macro uncertainty. Listen in.
In terms of mega deals, we had 2 mega deals in the last financial year. We have a pipeline of mega deals today. What is sort of what we saw in the past when things of this nature happen, which is changes in the environment. There's also an interest with clients on cost takeout, automation and efficiency and consolidation. We will see how it plays out because it's only a few days as clients have looked at it. But we have seen our large deals moving, meaning which we have closed, moving into the next phases as was evident.
Okay, on that note, we're going to step into a very short break. And after the break, we'll come back and give you what's happening in the world of commodities. So stay tuned then. Welcome back. You're tuned into Power Breakfast on CNBC TV 18. A quick look at what the Asian markets are doing as of now as well. So Hang Seng as well as Shanghai are settling on the green side right now. Look at Hang Seng holding on to gains of 1.6%. Shanghai is holding on to gains of almost 0.5% as well. Taiwan index on the flip side is down 0.8%, though it was down almost 1%. So some bit of a recovery that we're seeing coming in the Asian markets in terms of at least the Taiwan index. So surely keeping an eye out on that. Nifty implied open is still indicating a bit of a muted to a negative start for the Indian markets. But in other corporate updates that we have coming in for you all, sources revealed to CNBC TV 18 that Eversource Capital is in talks with the ride-hailing firm BlueSmart, and this is for a possible acquisition. Parikshit is here to tell us the details on this front that are coming in as well. Good morning, Parikshit.
Well, we believe that Eversource is now in advanced talks with BlueSmart to acquire a majority stake. And the discussions are for a stake sale of around 800 to 850 crores. So let's see how things progress, but we believe that things are moving positively. Secondly, we believe that Eversource wants Anmol Jaggi, who is the head of the BlueSmart board, to also step down. And they also want both Anmol Jaggi and Puneet Jaggi to distance themselves from the company as founders. So the final decision on this could be taken in the next 2 weeks or so. Eversource Capital did not respond to CNBC TV 18's queries. But at the same time, there is also pressure building on Gensol. And this is with regard to an MCA probe. The Ministry of Corporate Affairs has initiated a suo motu inquiry into the working of Gensol to see the irregularities, to examine the paperwork, to look at their filings. And it's possible that some action may be taken depending on the findings. There's no timeline for the investigation has been given as of now. But yes, pressure on Gensol, and at the same time, the company, the BlueSmart company with which Gensol had a leasing agreement, BlueSmart itself is in talks with Eversource for selling a majority stake.
Right, Parikshit, thank you so much for giving us the latest update in terms of BlueSmart, and obviously we'll keep an eye out on Gensol going forward as well. But Parikshit, stay on with us because now we do have US Vice President J.D. Vance, who is slated to arrive in India later today. What's on the agenda? What are we keeping an eye out on here?
Well, it's both an official and personal visit, so to say. So he lands at 10 a.m. in the morning, and the first agenda on their itinerary is a visit to the Akshardham temple. Now, J.D. Vance, the Vice President, is visiting India with his wife, Usha, and also 3 children. In the evening, J.D. Vance will be calling on Prime Minister Narendra Modi. It's expected to be a 30-minute meeting. It's going to be important in terms of reviewing the bilateral ties since the time Trump and Modi met at the White House. So you expect a discussion on trade in quite a bit of detail as well. They are likely to express sensitivities on both sides, and there may be an intent to resolve the outstanding issues in the bilateral trade negotiations at the earliest so that we can have an interim trade deal. Secondly, issues such as immigration, defense, security will all figure prominently in the talks as well. There will be discussions on startups, more manufacturing in India, space cooperation. The Russia-Ukraine war will come up for discussion, and so will the war in Gaza. China, of course, will be an important factor during the negotiations, as both India and the United States have a massive trade deficit with China and have concerns on on the economic and security rise and some of the steps that China has taken over the years as well.
Okay, Parikshit, thank you so much for that, and thank you so much for joining in with us this morning. But let's move on, and we have Manisha who's waiting by to tell us what's happening in the world of commodities, what's trending this morning. Good morning, Manisha.
Morning, Vinny, and thank you for that. Well, I'm looking at the gold prices because we've seen an all-time high yet again in the early Asian markets right now. Well, the markets are reacting to tweets from the U.S. president where he says the person who has the most gold sets the rules. So clearly some reaction coming in from that, I'm sure. But then apart from that, the concerns on tariffs just about continue. The EU interest rate cut also has enhanced more gold buying into that region. The dollar index is now at a 3-year low below 99, so that has been supportive as well. And if you look at the prices itself, we've seen 12% of gains in last 1 month for prices. And for this year, until now, the gold is up by 29%, clearly outperforming various other asset classes and within commodities as well. The other one that I want to talk about is the crude oil prices, because important developments coming in here. The prices have come off its 3-week highs. Remember, we saw 3% of gains on Thursday. So the U.S. and Iran on Saturday have agreed to draw a nuclear deal framework. So some premium from the prices seems to be going away from that. And then apart from that, it is the U.S. trade deal with Japan and European Union in focus, and the markets will react to that during the day today.
Okay, Manisha, thank you so much for that. Surely keeping an eye out on gold specifically, that continues to shine bright as well. So yes, gold is something that has been trending. Safe haven demand, that's going up as well. But a quick check before we wind down this edition of Power Breakfast in terms of what the gift Nifty and Nifty implied open is indicating. A beautiful red start continues. As of now, look at the recovery actually. Bias is still towards the red and negative side, 19 points down as of now. But at one point of time when we started the show, it was down more than 50 points. So, now a slight bit of a muted start is what we're watching out for, not a sharp decline that we're keeping an eye out on. And similarly, like we marked the Taiwan index as well, because that's a bit of a recovery as well from the day's lowest point. So keep an eye out on that. Hang Seng indicating a positive, it started on the positive note as well. So yes, surely keeping an eye out on that. Nifty implied open indicating a 16-point decline. But with that, we'll wind down this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.